Have you ever wondered what the future holds for technology and how its evolution could potentially reshape the stock market? Let's take a moment to delve into this fascinating topic. We are living in an era of rapid technological advancement. In fact, it's moving at a pace that is faster than anything we've ever experienced before. From the nascent stages of the internet to the advent of artificial intelligence, technology has continually shifted the paradigms of our world and its markets. In the same way that the Industrial Revolution remodeled society in the 19th century, today's technological revolution is reshaping our economies, our societies, and indeed our stock markets. Big data, artificial intelligence, robotics, cloud computing, and cybersecurity are just a few of the buzzwords that are not only transforming our daily lives, but also creating lucrative opportunities for businesses and investors alike. Technology is the backbone of innovation across various sectors. It's the driving force behind the latest medical breakthroughs, the creation of sustainable energy solutions, and the development of smarter, more efficient cities. It's changing how we shop, how we work, and how we connect with one another. In the realm of finance, technology is not just changing the game, it's changing the entire playing field. The stock market, an age-old institution, is no exception to this sweeping tide of transformation. The rise of fintech has made investing more accessible, and the advent of blockchain technology has the potential to revolutionize how we conduct transactions and store data. Tech stocks, therefore, represent a significant portion of the market, with behemoths like Apple, Microsoft, and Amazon leading the charge. But it's not just the titans of tech that are making waves. Smaller, high-growth companies specializing in areas such as cloud computing, artificial intelligence, and cybersecurity are also emerging as game changers, offering exciting investment opportunities. As we navigate this exciting landscape, we find ourselves faced with a question: where should we, as investors, place our bets? The answer, while not straightforward, lies in understanding the trends, the disruptors, and the potential of technology to shape our future. Let's turn our attention to the giants of the tech world, companies like Apple, Microsoft, and Amazon. These titans of technology have not only shaped our digital landscape, but have also staked their claim in the financial markets as some of the most valuable companies in the world. Let's start with Apple, the creator of the iconic iPhone and a powerhouse in the world of consumer electronics. From their sleek devices to their expanding digital services, Apple's innovative products have secured them a loyal consumer base and robust financials. As of late 2023, Apple's financials are as solid as a rock, with a market capitalization that dwarfs the GDP of many countries. Next, we have Microsoft, a name synonymous with personal computing. Microsoft's dominance in the software market, coupled with its successful foray into cloud computing with Azure, has made it a staple in the tech industry. Their strong balance sheet and steady revenue growth make them a reliable pick for investors seeking stability in the tech sector. And then there's Amazon, the e-commerce giant that revolutionized online shopping. But Amazon's reach extends far beyond retail. Their cloud computing division, Amazon Web Services, has been a major growth driver, contributing significantly to their impressive financial performance. Amazon's financials are as impressive as its vast array of services, and it's no wonder it's a favorite among investors. These tech titans, with their innovative products and services, have a firm grasp on the market. Their size and influence provide a certain level of security for investors. They have shown consistent growth over the years and have weathered economic storms, making them a safe harbor in volatile markets. However, it's important to remember that while these tech giants offer a certain level of security and stability, they might not always be the fastest growing stocks, but they are instrumental in setting the pace and direction of technological innovation, and their influence on the market is undeniable. Now, let's shift our focus to the smaller, high-growth tech companies making waves in areas like cloud computing, artificial intelligence, and cybersecurity. When we talk about these companies, we're discussing the potential game changers of tomorrow. These are the firms that, though smaller in size, carry a massive growth trajectory. They're the ones pushing the boundaries, innovating, and disrupting the status quo in their respective technological niches. Take, for instance, the realm of cloud computing. There are numerous up-and-coming companies out there that have been posting impressive growth rates, all while providing cutting-edge services that are transforming how businesses operate. Then there's the fascinating world of artificial intelligence. AI startups are not just creating smart algorithms, they're potentially reshaping entire industries. From healthcare to finance, the applications are vast, and the growth potential is immense. And let's not forget about cybersecurity. In our increasingly digital world, the demand for robust security solutions is skyrocketing. This sector is ripe for high-growth contenders, and several firms are already standing out with their innovative approaches to tackling cyber threats. Now, it's important to remember that investing in these high-growth tech companies does carry a higher level of risk. They're smaller, they're newer, and they're often unproven in the grand scheme of things, but with that risk comes the potential for higher returns. Consider this. While the big tech companies have already experienced their explosive growth phases, these smaller firms are just starting their ascent. They have the potential to offer returns that could dwarf those of their larger counterparts. When comparing their performance with big tech companies, it's crucial to take into account the stage of growth they're in. The giants of today were once the high-growth contenders of yesterday, and who knows, among these smaller companies, we may just find the tech titans of tomorrow. So, we see that while these high-growth companies might be riskier, they could potentially offer higher returns. In the world of investing, there's always a balance to be struck between risk and reward. A delicate dance, if you will, between the thrill of potential high returns and the comfort of stability. And this dance is performed on the stage of portfolio diversification. Diversification, in its simplest form, is the practice of spreading your investments around. As the old saying goes, don't put all your eggs in one basket. In the context of tech stocks, this means balancing your investment between the titans of tech and the high-growth contenders. On one hand, we have the titans of tech, companies like Amazon, Apple, and Microsoft. These are established giants with consistent performance, solid financials, and a history of innovation. Investing in these companies can provide your portfolio with a level of stability. They are like the anchors, keeping your investment ship steady amidst the turbulent seas of the market. On the other hand, we have the high-growth contenders. Think of companies in emerging fields like cloud computing, artificial intelligence, and cybersecurity. These are smaller, newer companies that may not have the same track record as the titans, but they have immense potential for high returns. They are like the sails of your investment ship, catching the winds of technological innovation and propelling you towards potentially lucrative destinations. The key is to strike a balance between these two types of investments. A portfolio that is too heavily weighted towards the titans may miss out on the high returns of the high-growth contenders. Conversely, a portfolio that is too heavily weighted towards high-growth stocks may be more volatile and risky. Remember, investing is not a sprint, it's a marathon. It's not about betting it all on one company or one sector. It's about building a well-rounded, diversified portfolio that can weather the ups and downs of the market. Investing is not about choosing between big tech and high growth. It's about finding the right balance. That's the true art of investing. The balancing act between risk and reward, stability and growth, the old and the new. As we reach the end of this discussion, let's summarize the key points. Technology, as we've explored, is a force that continues to shape the world, driving innovation across various sectors. From healthcare to entertainment, from our daily routines to global economies, technology is the pulsating heart of change. This impact is mirrored in the stock market, where tech stocks in many ways are the barometers of this transformative tide. We've seen the might of the titans of tech, companies like Apple, Microsoft, and Amazon. They're not just colossal in size, but also in their influence, shaping industries and consumer habits. Their solid financials and consistent performance make them attractive, providing a sense of security in a market known for its volatility. On the flip side, we also delved into the realm of the smaller, high-growth contenders. These are companies that may not have the size or the history, but they possess what could be even more important: innovative products or services in areas like cloud computing, artificial intelligence, and cybersecurity. Their potential for growth can be tremendous, offering investors opportunities for significant returns. But here's the catch. It's not just about chasing the next big thing or sticking to the tried and tested. It's about finding the right balance. That's where the art of diversification comes into play. A well-diversified portfolio is key to navigating the unpredictable waves of the stock market. It's about spreading the risk and maximizing the potential for returns. In conclusion, the world of tech stocks is as dynamic as the technologies they represent. It's a landscape filled with potential and pitfalls, with opportunities for gains and losses. It's a game of strategy, a test of patience, and a journey of discovery. Remember, the future of technology is exciting, but as investors, we must navigate this landscape with knowledge, caution, and a well-diversified portfolio.